Diwali Double Dhamaka. On the occasion of Diwali festival, the 7th of November and the 8th of November Wednesday and Thursday are trading holidays for markets. An exception is the Lakshmi Puja and the Muhurat trading on the evening of Wednesday from 5:15 to 6:30 pm. Situations like the light comes after the dark night, peace follows the war, calmness embraces after the storm, welfare at the end of crisis, surplus after deficit prevail the markets on the eve of Diwali, only to rain the blessings of Goddess Lakshmi on investors. First, a heightened panic pervaded the world oil markets with the sanctions imposed by the US against Iran for its non-compliance with the nuclear proliferation deals. Market experts strongly believed that there would be a shortage for crude oil as the sanctions would be in place from the 5th of November, 2018. As feared, the crude prices started to boil and touched their recent highs, posing a devastating effect on the world economies. The dollar-linked currencies around the world incurred phenomenal losses by losing their exchange value with dollar. This led to a bond market surge even as the yields crashed. The panicky international equity investors shifted their investments into safe havens such as gold, silver and treasury securities, where as a result those securities and precious metals witnessed a rally. In India too, the rumors of an impending liquidity crisis in the financial sector that include NBFCs and housing finance companies unleashed across the markets. With the above-mentioned issues, the Indian markets also along with global bourses experienced a stampede of panic sellers during the last 1 month or so. America seems to be convinced with ground realities. First, it had come to terms with North Korea. Now, the same is happening. The much-touted trade war is going to end. The ceasefire already announced. The strategic financial moves by China made the US rethink. To end the tariff war would ultimately prove detrimental to the American interests. At last, the US convened a summit with China at G20 summit in Argentina in the last week of this month end. What is that ultimate weapon that China flexed? It decided to join yuan, renminbi, into the IMF-managed reserve currencies. The dollar may lose its monopoly as a reserve currency. If the yuan gets the status of reserve currency, China can convert its dollar assets held in the US into its own yuan currency and store them with IMF, International Monetary Fund, safely. This development is a serious threat to the stability of the dollar that has no equivalent gold reserve support, and finally, the paper currency will lose its monopoly as a global currency. Whatever may be the fate of dollar, the tariff war that the US had engaged with China which created panic among countries and markets. It is now not more than a punctured balloon. It could not have any effect on markets in the future. America's dream to stifle Iran with tough sanctions also proved futile. The restrictions will boomerang as the US itself would have to pay higher prices for crude oil it imports. This made the big brother go slow on the sanctions. Now, India, Japan, South Korea and another 5 countries are exempted from the sanctions and they can buy Iran oil as usual even after the deadline the 5th of November, 2018. This reverting decision is a clear indication for America's can't but the situation. With Iran oil flow smoothly as in the past, there will not be much disturbance in the international oil supply chain. Oil markets get stability. Countries like India can make oil payments in their own currencies, or follow a barter system. Since the pressure on dollar eases, the possibility of a weakening threat for Indian rupee, INR, with USD. To sum up, oil supplies are not disturbed. Oil prices don't skyrocket. No peak oil situation. India does not depend on dollar. For Iran oil, India can pay in barter system by exporting food products in lieu of crude. It means Indian exports continue to be in demand. When there is a chaotic situation, people usually turn to a safe haven that is traditionally gold and silver and gilts. As risk capital moved out, equity markets get subdued. When chaos ends and stability reappears, people again start coming back to equities to take the risk as the rewards are so lucrative. With fresh buying, shares move northwards. And bond markets, gold and silver markets lose shine. This Diwali moves the stock markets from dark to dawn, to mass to ashes. With this sole reason, on Thursday and Friday, Nasdaq, New York Stock Exchange, SGX and futures markets have recovered. Brent slipped to $73 from $85 while West Texas International Oil fell to $63.89. The INR-USD rate recorded 100 paise overnight, first in 5 years, at 72 rupees and 45 paise. The conflict that surfaced between the centre and RBI concerning the tough norms applicable to the NBFCs and housing finance companies has been subsided last week as the centre stepped back. The much-feared government intervention in the RBI functioning by giving directions to RBI in taking policy decisions which could have busted the autonomous status of the central bank was avoided. Indian debt markets are fast moving towards a surplus state from the recently worsened liquidity problems. This surplus liquidity capital is going to lift the markets high. It cannot be ruled out the possibility that the capital markets might soon breach the lifetime highs. The RBI directed the banks to on the 2nd of November, Friday, to buy the bonds of NBFCs. So, the non-banking finance companies would issue bonds to the banks at lower interest rates and use the proceeds to get rid of high-interest bonds they held. The NBFCs have to redeem bonds worth 1.2 lakh crore rupees in October and November. Now banks will restructure this debt by accepting new bonds from them. The directive of RBI is like a lifeline to the NBFCs. The government also directed the banks to simplify their loan dispersals concerning small and medium-scale industries. Within 59 minutes short duration, the banks have to clear the loans of 1 crore rupees and below, as per the directive. GST-paying firms are eligible for a 2% interest subsidy and export firms 3 to 5%. These are the firms that contribute 28% of the GDP and 48% of the exports. The state bank SBI immediately swung into action immediately the next day, that is Saturday morning. These disbursals strengthen the liquidity and in turn, the large sums of money will work as a catalyst to fresh rally in capital markets. Let us look into the prospects of individual companies. Hindustan Oil Exploration Limited and Ceylon Exploration Limited in the oil exploration sector, MME Paper Limited and International Paper AP Paper Limited in the paper sector. Global Spirits Limited in the liquor sector, Apollo Microsystems Limited in the defense sector, Kiri Industries Limited, India Glycols Limited in the specialty chemicals, Gujarat Narmada Valley Fertilizers and Chemicals Limited in fertilizers sector. Kirloskar Oil Engines. Arvind Limited in emerging demerger opportunities, Devan Housing Finance Limited in housing finance sector, Maharashtra Seamless Limited, Jindal Drilling Limited in steel sector, Godrej Agrovet Limited in multi-product companies, Syntex Industries Limited in textile sector. Future Consumer Limited, Shoppers Stoppers Limited in retail sector, Automotive Axles Limited in auto components sector and Maharashtra Apex Corporation Limited in the special situations category could be considered for 1-year investment as Diwali Dhamaka shares. The stocks may not have the impact of coming general elections. During the election time, these shares might be subdued because of technical reasons but would most probably give fantastic returns on investment in 1 year. Contrary to the pessimistic views, most prominent companies in different sectors are delivering fantastic financial results they achieved in the first half, including Q2 FY19. Some of them are Ester Industries Limited, Indian Hame Pipe Limited, National Peroxide, Kirloskar Pneumatic Company Limited and Lux Industries Limited. With the steel boom, Steel Authority of India Limited reported a super-duper performance. Kiri Industries Limited is scheduled to announce Q2 and H1 results on Monday, the 12th of November, 2018. These results are expected to be fabulous with a never-before kind of performance. Just like Diwali, fabulous market too, a play of dark and light. With Diwali greetings.